It's like a cult.
It's like a cult?
Yeah.
In a good way, though.
In a good cult. Yes, a good cult.
Okay. I mean, in the stuff that they hear, some of it's new, some of it's old, and a lot of it is common sense. And you were talking a
All
lot
of
about
it is common sense.
Right.
But of course, when people use the word common sense, what they mean is uncommon sense. Because the standard human condition is ignorance and stupidity. And so when they say old Joe has common sense, what they mean is he has uncommon sense.
I guess it's a bit of a misnomer then. But
It really is.
So, why is it that people can't think clearly about investing or decisions in their lives?
Well, they don't think very well about sex or gambling either. The standard human condition is a lot of miscognition.
And there are ways to make hay of that, or...
Yes, you take advantage of other people. You can improve your own life by eliminating your miscognitions.
Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today. As ladies and gentlemen, that was Charlie Munger, Warren Buffett's best friend and former partner at Berkshire Hathaway. Charlie Munger just passed away recently, and he is one of my favorite mentors on the planet in regards to investing, finance, and human psychology as a whole. Ladies and gentlemen, the reason I played this is because what he said is so true. All it takes is a long-term perspective and common sense in regards to investing, and you will become the new 1%. I promise you, my friends. And in regard to today's video, discussing a Ripple hack and whether or not this means it's over for XRP. On the contrary, this is one of the biggest things that has ever happened in regards to XRP. There was some controversy, but before I get into that quote-unquote hack, here we have that the automated market makers, the future biggest passive income opportunity for the XRP army, has passed officially. And this will go live February 14th on Valentine's Day 2024. In just 2 weeks, we are going to see major scaling in regards to our generational wealth. Ladies and gentlemen, if you've been holding Flare in any capacity at all since the airdrop, or whether or not you've bought it off the exchange, you've been happy with the monthly returns you've been earning. And recently, with the recent partnership of Google Cloud with Flare, oh my goodness, the price has been exploding as well. This bull run is going to be special for Flare holders, for XRP holders, and for crypto investors invested in the next generation infrastructure of the financial system. But before I get into anything else, I have to remind you that this quote-unquote Ripple hack was absolute misinformation from the maxi community. They pointed out that, quote, Ripple was hacked for 213 million XRP, or over $100 million. And this was from Zach XBT, someone who I believe is a more in the maxi crowd, if you will. But here Chris Larson debunks that fact. There was unauthorized access to a few of his personal XRP accounts, not Ripple's. They were quickly able to catch the problem and notify exchanges to freeze the affected addresses. Law enforcement is involved. That was an isolated incident, and Ripple wallets are 100% safe and secure, were never compromised, and apparently all of these funds have been frozen. Try and tell Elizabeth Warren that they found the thief and the hackers with the swiftness because of the blockchain and because of crypto exchanges. I don't think she'll buy it. The maxi community wanted to try their absolute hardest to say Ripple was compromised. But with the swiftness, the titans of Ripple, Chris Larson and Brad Garlinghouse debunked the FUD. This was irresponsible speculation. And again, no Ripple wallets were mismanaged. This is absolutely important, as most XRP misinformation comes from the maxi community because, oh, they're scared. They know we're their only threat. They want to try their absolute best to kill the baby in its crib. It's too late for that, though. The XRP army is about to get their full freedom from the SEC in around April. And what's so crazy is that this is actually aligning with a black swan event timeline that I've been discussing for a while, with the Fed interest rate cuts potentially coming in March. Here, Daniela Camboni and Lynette Zhang, two powerful female titans in the financial space, are discussing why a financial crisis is as early as April is in the cards. We've been discussing a crypto pullback being likely, a stock market pullback after new all-time highs being likely, and inevitably a black swan event, a crisis to hide the fact that they need to cut rates. The banking system is failing behind the scenes. And I bring all these powerful and intelligent people in front of you to remind you it's not me saying it. All these pundits are agreeing with the inevitable XRP adoption timeline. I believe XRP adoption will coincide with the next financial black swan event, the next liquidity crisis. And before you know it, XRP will be freed from the lawsuit and will be well positioned to help with any financial system problems.
Okay, another worrisome article here about the dominance of the 10 biggest stocks in U.S. equity markets is increasingly drawing similarities with the dot-com bubble, raising the risk of a sell-off. This is according to JP Morgan Chase quantitative strategist. The share of the top 10 stocks on the MSCI USA index, including all the so-called Magnificent Seven tech stocks, has risen to 29.3% by the end of December. This is according to strategists at JP Morgan. That's why it surprises me. I know I had Greg Manarino on last week, a friend of yours as well. I love him. You know, and he says he's taking advantage of the bubble in equities, but frankly, it's terrifying.
Well, it is terrifying because these top firms are in every single mutual fund, pretty much almost every single ETF. So that means they're in your 401k, they're in your pension plans, they're in your IRAs, they're inside. That bubble is just waiting to burst. And what's going to keep it afloat? More free money? When is the Fed going to pivot? We've got the spring coming up, and there are a lot of dangerous black swans that are flying right around that area. And when the Fed turns around and lowers those interest rates again,
right?
I mean, what's that really telling us? But that we're in very deep doo-doo, and I think it's too late.
And you know, we always talk about how there's a lag effect of how long that takes to hit the system. So when that pivot does happen, right? When do we feel the after effects of that?
You know, the more they do, the more fragile the system gets. And a big part of the problem is the Treasury debt levels that have, they're issuing so much Treasury debt as the Fed and other central banks and other typical longer term players have stepped back. I think we're going to see it almost instantly. I think we will, because I think people are going to recognize at that juncture that we have a big, huge problem. And just lowering the interest rates, even lowering them back to zero, isn't going to help. It's not going to help all that massive amount of debt. So, I think we could see some level of crisis by this spring. I really do.
So
I really
by
do.
the spring.
Yeah. I've been feeling that.
I know.
Now, guys, I know what you all are thinking. Oh my goodness. Oh my gracious. We really are correct. And we 100% are, my friends. JP Morgan discussed the J.com bubble similarities. We are at new all-time highs for the stock market, and we are likely to see them deflate the bubble slightly. Deflating the bubble slightly is taking place right now, as the S&P is down 70 points after Fed Chair Jerome Powell stated, quote-unquote, that the March rate cut is unlikely. In just 5 minutes, the S&P fell over 50 points, erasing nearly $500 billion in market cap, after what seemed like a likely victory speech in December. The Fed is backtracking. This is very, very important because at the same time, U.S. regional bank stocks were collapsing just yesterday. Then, we also had that the last time bank credit contracted this much was the global financial crisis of 2008. I do speculate that the Fed will have to go back on their word of not thinking rate cuts are necessary, and I do think they will cut rates in March. Fed policy is the most important indicator we need to see where the future of this market is going. And inevitably, we will see these rate cuts. We will feel the next financial crisis immediately, stated Lynette Zhang in that video. And I do agree, as the more they pull this card, the weaker the system is. The system is showing its cracks. This aligns with the waters above pullback theory we've been talking about on this channel. But it also aligns perfectly with the XRP rising out of the ashes in April, with the conclusion of this lawsuit being a likely narrative catalyst. It may be very possible that XRP will be used as a solution to financial system problems beginning in March, April into 2025. The last time XRP charts aligned like this was March 2017. And right before a parabolic move for XRP happened, we saw a beautiful pullback, a capitulative crash. And that was the exact same retail sentiment that we have right now. Ladies and gentlemen, what you're seeing on the screen right now is the March 2017 XRP price pump. And I wouldn't be surprised to see the XRP chart play out in a similar fashion in the coming months. I believe we are in red candle territory into green god candle territory. The sky truly is the limit. And ladies and gentlemen, out of the other side of this, we will become the new 1%. Continue to stay steady and remain the course. Don't get footed out. Show your support to the cause by getting your Fuck the SEC 589 or Aggressively Average t-shirt at aggressivelyaverageapparel.com down in the description below. Ladies and gentlemen, the XRP is a movement of new 1%ers. And by the time the rest of the world figures it out, it'll be too late. Guys, to cap off this video for today, I'm going to leave you all with Fed Chair Jerome Powell speaking himself about what he speculates he's going to do in regards to rate cuts. But I'm going to need you all to decipher the lizard talk and listen to how wishy-washy he is about what he's looking to do next time around. I do think in March we could see the rate cuts. And let's see if a 2020 COVID-style pullback and rate cut scenario is in store for us. Ladies and gentlemen, this is the Bearable Bull here. Thanks for tuning in. As always, I appreciate every single one of you. Now I'll be back tomorrow with another video.
We have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example. And goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition. But we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing, and that tells us that we are gives us confidence that we're on a path to a sustainable path down to 2% inflation.